monthly. So look forward to connecting with all of you.
Michael, can you put your email in the chat?
Sure.
Whatever you want people to use to request.
Yeah,
the
email,
newsletter.
or you can even just hit me on Facebook and I'll get you added.
Or go to the group.
Awesome.
I know we posted some stuff recently too.
Yeah.
Yes, and just FYI, I'll keep kind of pushing us along here, but we do have a page now for KC Multifamily Capital, which that's new. I created the page just about a week ago. So the purpose of the page is that the page can be public. The group is currently private, so everything in the group stays in the group. It can't be shared or redistributed. So anything that is put on the page, like the events and things, can be shared. So we encourage you to check out the KC Capital page, it's KC Multifamily Capital page, and share our events. So on down the list, Ryan.
If I can figure out how to unmute. Well, this is the first time that I've dropped in on this group, so I appreciate what you guys are doing and what you're having here. My background, a little bit about it. I've owned a number of properties, a little bit of commercial, mostly, and some single family and some very small multifamily. I've also owned about 10 restaurants and a property management company over the years. Recently sold just about everything, and I'm actually acting now as a business broker there in the KC area, working with other restaurant operators and some mobile home park owners that I'm hoping to work with, as well as self-storage owners, working with them to sell their properties. And obviously it's a pretty big buyer pool for something like that, but I'm very interested in getting into, the multifamily world. I just have not necessarily done it yet. But
Welcome.
just to be a fly on the wall here.
Okay, Kyle.
My name is Kyle Picorni. I live in Overland Park. I don't have as impressive as a rap sheet as everyone else here. I have one duplex. I live in half of it, so I house hack, if you will, and just looking to learn more on both multifamily or single family or apartment syndications. So that's why I'm here.
Awesome. Welcome. Keith.
Hi, my name is Keith Mace. I'm a daytime roofer and part-time investor. Been coming to your meetings here for about 6 months and learn something every week or every month. Now I go into every week, I guess. So I'll learn faster.
Yes. Exciting. Welcome. Thomas, what about you?
Hello, this is my first meeting. I have an even less impressive resume than Kyle. I've started seriously investigating real estate investment about a week and a half ago, 2 weeks ago. My investment journey has been mostly in stocks for the last 15 years. But I thought now is a good time to diversify. And interest rates are amazing right now. So I'm looking at, I have a little more assets to my hand than say your normal 22-year-old. So I'm looking at options around maybe slightly larger passive investing. So some friends of mine pointed me to John Wires here. So, and he had invited me
Awesome.
to this.
Yeah, John Wires is a legend, isn't he?
Don't say that. No,
I can't say that because Greg will get mad at me.
No, I don't
get
Greg,
mad.
Greg can be the legend. That's a lot of weight to handle there. Thanks for joining, Thomas. Yeah, we're all definitely different, different experience levels. And I assure you, everybody is willing to learn something new. That's for sure.
Yep. All right, Adam.
Hi, everyone. I'm Adam Doran. I'm with Prevail Innovative Wealth Strategies in Leawood, Kansas. My full-time job's in financial services. The short version is I help people who make good money to not pay taxes in retirement. The slightly longer version is I'm a real estate investor myself and love working with real estate investors because the strategies that I help my clients implement will help you enhance what you're already doing in your wealth building through real estate. So that's my full-time gig. As far as my involvement with real estate investing, been doing it since 2011, got started with wholesaling, then single family rentals. And then thanks to John and Greg last year, got into the multifamily space and partnered with them on my first multifamily deal, which is an apartment complex in Lee Summit. And I'd like to do more deals like that.
Welcome. Okay, we have Katie.
Hey, sorry, I'm juggling my two littles here.
That's fine. We understand.
So if you hear loud screams, that's just my children. I am a multifamily real estate investor here in Kansas City, kind of just starting off. I think I connected with John a few months ago. We are part of the Sumrock group down in Texas, but also networking outside of that to put together our first deal. So just looking right now for acquisition and networking a ton. We have a little bit of single family background with 2 flips and just had kind of looked at the scalability of everything and really liked the multifamily direction. So we've kind of pushed over into the syndication route. So just a lot of self-educating and networking and excited to see everybody in KC. We've done a lot of outside networking, but it's nice to see the faces that are actually local.
Yeah. Okay, we have Mark Macbeth. Are you on?
Yes, I am.
Hi, you want to introduce yourself? We're going through introductions quick.
Yeah, sorry, got on a little late. Yeah, Mark Macbeth with Benchmark Property Remodeling and RoofMax, and we are a non-traditional roofing company that rejuvenizes asphalt shingle roofs instead of replacing them. And so we work with multi-unit owners, single owner homes, and save people huge amounts of money by rejuvenizing their roofs versus replacing them.
Is that a coating or something, Mark? Not to dive into that too much, but you piqued my interest.
That's a good question. It's not a coating. It's actually a soybean oil product. So
You're cutting out, Mark. Or is it me?
No, I think you cut out. That's fine.
All right. So, John, you want to introduce yourself?
Yes. My name is John Myers, obviously by the tag there. I work with Angel here, and we all kind of came together and brought KC Capital Group and KC Multifamily together. Greg and Michael here, we all get to rodeo all this together every week. So we appreciate you guys coming. We're always trying to learn. We're trying to gear these meetings towards to be something specific and, underwriting and mostly in the commercial space. So we're always looking for other investors to share their experiences, and we share ours. I've been in the KC area for, 13, 14 years or something like that, and have personal rentals here, and then partnered on some larger deals with Greg. So So yeah, we're just looking to continue to keep that going and see what can happen here. We know it's a little bit complicated times with all the COVID stuff. So maybe they'll give us a little bit of a respite before we get into the heavy buying again. And I'm sure it's going to come here around the corner, especially maybe after elections. We'll see. So yeah, I appreciate everyone for coming, and hopefully we can grow and do business together for into the years.
Yep, we're gonna do a deal.
That's the objective.
Yep, Greg.
That's the only way I'm going to stay interested.
All right, you want to introduce yourself before
Sure.
you jump into the whatever you have as.
Sure. And that's the best part, is that no one else knows what to talk about. So, no, my name is Greg Huebner. I've owned some form of real estate since 2004. My first purchase wasn't my own home. It wasn't even a single family home. It was a 3-unit property, and pretty much most of the properties since then have all been of some number of units, more than one, outside of my personal homes. Until actually last year, where I bought 2 single family houses. But those were highly strategic purchases in that regard. But now I own a couple multifamily units as well, with John there and a couple other partners and Adam, and just really enjoyed the entire process of it, and how I was able to bring my professional career into real estate, and actually up until the end of last year, take some of my real estate experience into my professional career as well. I really believe you can take your experiences and move them around, no matter wherever you're working. From the very beginning, I was really focused on maximizing dollars per square foot, which is why I never bought a single family home, until I was 15 years into the business, basically. So it's I was just always looking at how I can mitigate risk and have at least all my bills paid for at a property every month, almost guaranteed, versus having a property sit empty for a month or two or something like that. Sorry, the sun off my bench outside is getting reflected onto me, so apologize for that. So that's really where multifamily, just the natural natural segue, just the scalability perspective, efficiencies, being able to actually hire a property manager. You don't have to be there day in, day out. And so it's just, there's a natural evolution for me. And I think, anyone can join right in from this. It's great that you all have different experiences and everything, but I think you can take what you've realized in the past, identify your highest and best use, and use that to progress forward. There's a lot of more mindset activities around that I know Michael's working on some stuff, and I'm happy to share my perspectives in due course. But please reach out to me. I have no additional time, but I always find time to help other people out as much as I can. So with that, see if I can get this shared here. Optimize. I think this is going to share my window. But we'll start with this. You guys see the slide deck and everything here?
Yeah, I see it.
Yep.
All right. Let me make you guys a little bit bigger here. Maybe I can't. Anyway. Sorry, I'd like to see all you guys as well, not there we go. All right. So last we've kind of been talking basically our philosophy or our approaches, kind of narrowing down into a specific property. So we're still talking about location metrics. I'm calling this 201. No different than, it's just a second instance of what we're talking about here. Just a reminder, this is all information and demonstration purposes. We're not actually offering anything right now. The topics we're going to talk about, we're just going to kind of go back through the last 4 items that we talked about last week. Again, I think that video is posted, and I finally got some updates made and the slides over to Michael to post a little while ago. And then hopefully at the very end of this, we're actually going to be able to have some time to dig into some additional cities. And I don't have any cities to look up, so whether it's a hometown or city nearby or anything like that, we can dig into it and just kind of start extracting some of the data and what it potentially means, really. So the things we talked about in the past, I'd like to take a little bit deeper dive on here is population growth, income growth, home values, and crime rate, specifically. I think the population growth, you wanted to see about a 20% increase in population growth, and that was for about 250,000 to 1 million in population. And then it kind of scaled down the higher populations that you went. So as you got up to 2 million or so, I think you wanted to, you know, a 20% growth rate on a 2 million population city is going to be quite extravagant. But you know, having a 10 to 15% growth rate is probably more sustainable over decades. And one area you can look at is probably Dallas, that we all have heard about, you know, the Orlandos, the Phoenixes, and the Atlantas as well. I mean, Dallas in particular is a multi-decade population growth metric there. So income growth, you want to see about 30% increase in incomes there. I think the home value, and these are roughly all since 2000 or so. And there's some additional metrics that you want to kind of apply from about 2018 forward, but this will get you in the ballpark right now. Again, we're at like the 100,000 foot view of all of this right now. And the last slide deck, and at the end of this, we post some resources as well that I can go through and get further information on, either from you know, and we utilize other resources. These aren't necessarily things that we have put together, but we try to aggregate information over the last, you know, half dozen years or so from the podcast coming out, and just information being much more freely available and sharing and things like that. And so not that there doesn't need to be little tweaks here and there, but these will at least kind of identify if this is a good location to move forward in. And when I say location, this is from a MSA perspective, like the entire metropolitan statistical area. What I'd like to do a little bit is try to get a little bit down into the neighborhoods to some extent on this session or in the next session, and then that way you can really identify, you know, what are the cross streets that you need to really focus on or avoid from that perspective. So this is to try to get you, okay, is it a Salt Lake City? Is it an Atlanta? Is it a Boston? Is it a Chicago? Is it a Memphis? That type of thing, and then you can narrow down from there. Looks like we got some chats going here. Okay, I guess I just shared. So what I'd like to do here is navigate over to city data. So city-data.com is where a lot of this information is aggregated. There's also some information put out by the federal government and things like that, which we can get into in a future session. But for the most part, this is a good single source to, you know, identify whether or not this is a good location. We chose Kansas City, Missouri last time. I don't know why we chose that over Kansas. I probably just don't like John that much, so I chose Missouri side. And we started going through some of these numbers and things like that here. What I really wanted to dive into here was the city income, earning, and wages data, and that popped up in a screen here. So when you come into this screen, you get a little map, which is really nice, and it's usually blocked out. I think it's really by the census zones, which ironically enough is coming up here very soon. But you can move into any of these zones in here, and you'll get a pretty tight, I want to say circumference, but a pretty tight box around areas in here. Now you can easily head over, you know, south of the country clubs, south of the plaza, and you know, and click on an area and get a lot more data on that block area right there. So I'll scroll down just a little bit. So you got median income of over 250,000. You got the zip code, so you can cross-reference stuff. You got population size, et cetera, et cetera, et cetera. You know, obviously low poverty level in that area. So this is really where you can get down at an even deeper level. And again, this is a snapshot in time. It's not trends. So it's tough to see this trend holistically here, but you can click this percentage change since 2000, and that'll change your bars down here, and you can kind of see where the trends are then going. So let me see what if I click off of that. So actually, Ward Estates is no longer dark purple because it didn't necessarily have the highest income. The income just hasn't changed that much, and that which I don't know. For those of you in and around Kansas City, that seems realistic. That's a rational response. But you start looking at some of these other areas in here, and here's Watkins Drive. So this is 71 right here, Highway 71, and look what's growing. This is the zoo. This is Kansas City Zoo right over here. If I'm right. I believe so, yep. So you got Swope Parkway, you got some areas right in and around Highway 71 that have had some pretty interesting growth rates. But at the same point in time, the median household income is still relatively low from that perspective. So you can have a 100% growth rate, off of a $14,000 incomes, basically from that level. So you still have to look at the data. You can't just say, oh, this is dark purple, like, I'm going gangbusters in that area. All right, you still have to look at the actual data underneath the trends and figure out whether or not this data, again, matches some of the metrics that you want to invest with. And pop back over to my slide here real quick. So some of the numbers that we came out here with, these were for risk, these are kind of all risk adjusted, John. Is that maybe the safest word to say there? It's pretty good location to be a fiduciary of other people's capital, put it that way. If you were going to go in and invest in these areas personally, you might have a higher risk tolerance. You might have boots on the ground where you can see something happening that no matter what, you're not going to be able to convince a handful of investors, dozen investors from around the U.S. that this is a good location. All right. So even with all these numbers and percentages and everything like that we've thrown out last week and that we'll talk about again this week, you still have to put it in context with, is this for you? Or is this for a small group of investors or a large group of investors? And do you have enough data to go back and tell the story? And I think that was the theme of the first session we did on this was, it all comes back to telling the story. You have to be able to tell a story to yourself, to your business partner, to your family, to your investors. And you have to be able to believe in that story that you tell when it all comes down to it. And I wasn't playing, I just pulled this up earlier today and was just kind of looking around in it and everything. We can go over to the Kansas side even. Obviously there's some large growth out over here. This is farm field 20 years ago. I don't even know that zip code existed 20 years ago. We're almost to DeSoto here. For those that know Kansas City and everything like that. So of course, the income is going to change massively. You had 5 farmers out there, and now you've got a population of 1,800. I'm being a little bit egregious there, but those that have known how Kansas City has built and everything like that, come down here even. You got 100% population growth, and this is. I gave some street names here earlier. Yeah, they don't even give the street names here. Cedar Lake, anyone know where that's at? Is that like 150th down there or something? But of course, you can have Spring Hill just south of it. So, of course, you got a lot of, you're gonna have a lot of growth there, but does that necessarily mean it's a good place to invest? I don't know. We need to go back in and do more research and do some more fact finding and everything like that. So anyway, I just want to show you that this was out there from the income side of things, to try to dig a little deeper from that perspective. I think that's, yeah, here's some more housing data information as well. This is one of the other topics that we talked about. So you can just see how the median price trend, obviously it's trending, you know, relatively up since 2009 in this area. This is Kansas City, Missouri as a whole, from north to south over there. So that's a really you know, good indicator, but it's also kind of interesting that the number of sales, you know, really spiked here in 2012, but the price of homes didn't. So obviously people were, you know, I'm just making a presumption here, is that, you know, the housing market kind of got flooded with houses coming out of the 2008, 2009 recession there. Finally people were unable to unload, and so the volume of houses spiked, but the price didn't. And the price didn't go up until the volume of houses kind of got cleared out again. If you notice that, there's kind of an inverse relationship to, well, except for that one right there. But when there's lower volume, the prices tend to go up. And that's a little bit what we're kind of seeing right now, along with low interest rates, who as Kyle or Michael there, Ryan kind of mentioned before. But yeah, I mean, interest rates are going to drive loan values up. I was actually looking at a loan assumption yesterday. The interest rate 3 years ago was 5.4%. For Julie that was on the call there. It was, you know, that was a decent rate at that time. But now when you get it, you know, closer to 3% on a $3.5 million mortgage, that's like an extra $5,000 interest you're just paying out. You know, $60K a year you just got to pay, just because. I'll just wait for the property to come out for auction at that point. But anyway, I just wanted, so when you dig into these extra links down here, so that was the city income. So here's the houses and apartment details and things like that, this slide right here. So you can really dig into the data a lot more right here. So this is where you want to go. That's a percentage change since 2000. Yeah, there you go. Sunset Hill, John, that's where we need to go.
Does anyone have any questions actually at this time, or maybe other tools you use for similar information? I assume a lot of people probably use city data for general info. I don't know where they get their info, if they get it from other third-party places, but it seems to be a good resource.
Right. And you do have to realize that some of this information is a little bit old. You know, I mean, you know, population in 2017. All right, I mean, you can Google, and again, even I think we Googled last time, and we had 3 different sites give us 3 different different populations, and it was like a 10% delta either way. So, you know, it all depends on what radius you choose to encompass an area, basically. So you got to take some of this stuff with a grain of salt here. That, you know, just because this is all trending in 2017, I mean, that's still 3 years ago, 3+ years ago. And we've had COVID since then. We've had a massive run up in prices, compression of cap rates, COVID, et cetera, all occurred during that time. So while this is a good resource, it doesn't necessarily need to be the resource that you use. And nothing beats boots on the ground. So I think we talked about it last week, where we're just partnering with somebody. If you found a deal out of state, you know, in Detroit or Sandusky, Ohio, or whatever, you know, I mean, just finding somebody local there to partner with will help you. I think, I personally believe, even though you think you're going to earn less money, having somebody there to partner with and bounce ideas off of and just be boots on the ground, other than your property manager, might be worth its weight in gold. Anywho, we'll kind of carry on here. So the next metric is 20%. Anybody have any ideas what that one might tie to? 20%. We talked about, go back without, there we go. So talk about population, income, home values, typically rising, and crime rate last time. All right, so 20%. Anybody have any guesses? The chat window open, you can unmute yourself. Feel free to talk.
It was all the cheat notes.
Yeah, I don't know if you're gonna find this one, John.
I thought that was on, I thought we went over that one last week.
Oh yeah, 20% was a prior one, is population growth, but there's another 20%er. It's poverty level. If you want the poverty level to be ideally less than 20%, you know, hopefully less than 15% of that MSA, and again, even down to that neighborhood. Okay. So Neil Bawa, he's the one that put a lot of these metrics together. Again, I believe they need to be synthesized a little bit more based on obviously not only updated, but also just some context put around them. Is that what he's a former data scientist, or currently data scientist. I don't know if he actually quit his job, but he loves the data and everything. You can Google him. He's got a tremendous amount of resources and everything like that. And what he's found is that as the poverty level increases over 20%, the percentage of late payments and things like that go up exponentially. And again, not to say that this is hard and fast. Again, you have to understand, you know, is this an area that you feel comfortable in? Is it for your own personal stuff? Are you going in with a business partner? You kind of grew up around that area, et cetera, and you feel comfortable with it? Or are you trying to, you know, get 20 people that you don't know to invest in an apartment complex? And you've got to be able to tell the story and sell the story around why the poverty level is so high. So where we can, so strongly preferred if you're risk adverse. So, I mean, one thing you should figure out is your risk profile. What did you say, John?
Just say it's gentrifying. It'll be all right.
That doesn't always mean that it's good. So again, the main city data website there, it says right here, there you go, percentage of residents living in poverty. It does a breakdown based on ethnicity as well. And you can get more data, more granular data as well. I love the changes. So in this case, you don't necessarily want purple. I don't think anyway. Because you don't want to see that the poverty level is increasing there. So, ooh, there's some color down here. What's this?
What income is poverty at on this, Greg?
It's a great question. Well, let me do, I'll do 2017. So there you go. You know, 12 to 24,000, depending on family size.
Now, so in my mind, poverty is that plus about 20 to 30 grand.
Huh.
Yep. I would concur. But this is where you become eligible for subsidies and things like that. And it even goes down state by state, it looks like, or some states, I guess. So, no, yeah, I mean, again, you know, all this stuff needs to be taken in context, and you need to cross-reference it again. You know, the median household income. That's cool. That floats. You know, the median household income of an area. I mean, you know, if we come back over here, again, this is around, you know, Swope Park and the zoo here. So I think this is the same area here. You know, the income is 28,000. So, and there's been no change in that since 2000, which I guess is good. even though I think before we had the median household income had increased by 100% since 2000 on when we were looking at it before. Actually, I think I got it right here. Where's that at? No, it's not Grandview.
Neil did a
Right here.
thing on proximity, right? How close or far you could be from good or bad stats to affect your property. So it's probably hard to tell too.
It's really hard to tell because again, and you know, Kansas City is a great. It's not so great anymore, but it really was a great example of that because you had pretty firm dividing north-south lines between Troost, you know, Paseo, Highway 71, things like that, and now you can kind of see things bleeding over across those north-south dividing lines. And I mean, I know he made reference in one video that, you know, there was I can't remember, it was like St. Louis or Columbus, Ohio, or something like that, where it was, you know, there's basically a condemned area. You know, the home values were $6,000 or $10,000, and he said 750 yards, which I don't know, anyone played football or, you know, ran track or anything like that. It's really, you know, I mean, it's a hop, skip, and a jump away, basically. Less than a quarter mile or about half a mile away. There's homes that were 750,000. So, but now, you know, he didn't make reference to was there a physical barrier between those areas. My presumption is yes, that there was a highway put in and one side got funding and the other side didn't. And that's a totally different talking point than what we're discussing right now, but that's the reality of what happened. And that's, you know, again, Kansas City is a great example of that, but at the same point in time, you know, things have just started to bleed over, and some of these areas that, you know, people wouldn't go in previously 20 years ago, people are starting to do a lot of work in, myself being one of them. So it's, you know, again, nothing beats boots on the ground, plain and simple, and you being comfortable in an area. I think you can probably throw maybe most of the metrics out the window to some extent by just being there and immersing yourself. Which again is so valuable to have local people around you to partner with. I can't find that specific area again, but it's not that far south. Grandview. It's got to be right there, maybe. 126 130. Oh. Well, anyway, so I mean, you got to take all this in context, you know. I mean, I think that's great that the poverty level is stayed at zero. It's still the actual poverty level is still 50% though for this one little area. So you got to put that in context and everything. You know, you come over here to Prairie Village. You know, that's pretty white. It's probably actually gone down some. You know, 1.5% poverty level. Yeah, so there you go. It's gone down 0.5 percentage point in Prairie Village. But you know, you're paying what, 250 plus for a home there, and you know, 80 to 100K per unit, give or take. And there might not be a great cash flow opportunity. There might not be a great appreciation opportunity either there. So that's kind of interesting though. I guess this big purple swatch here. So it's Merriam. I thought it, but yeah, there you go. Shawnee Mission. This is just south of Shawnee Mission here. So that poverty level has increased 8%. And you have residents below the poverty level at 10%. And this is where John owns all his properties.
Yeah.
No. But, you know, it's just really me, but you would have never have thought, I mean, I guess I don't drive this, you know, these little 4-block, you know, 5-block by 8-block areas. But, you know, you say Shawnee Mission, you see Merriam for those in and around Kansas City area, Mission, you know, everything like that. Like, you wouldn't think that the poverty level is almost 10% there right now. And it's increased. So I don't, maybe there's an opportunity there. Maybe there's just, you know, there's a lot of old owners that they've let their properties go, and other people are moving in, or, you know, I don't know. That's really where you need to dig deeper into the data, extract some more, probably do some investigative reporting, or, you know, I don't want to say due diligence necessarily, but you just got to gather some more information from local people about, okay, why is this 4-by-8-block area, you know, trending in the wrong direction? You know, why is this area up here along the river, you know, trending in the wrong direction, etc.
So Greg,
yes,
I vote that we check that out live on our next call.
we could do that.
I'm volunteering to be the one of us on the ground. If nobody else wants to go out, I'd be happy.
You did want to do that, sure.
I do. I want to walk. So yeah, everybody in my family's telling me that I'm fat and I need exercise. So help me out. No,
All
I'm
right,
just kidding.
we'll send you out.
We'll pick the real interesting areas for you then.
Yeah, after 9 p.m. too. We'll have to move on the time of our call.
I love it. Love it. I'm not afraid of those places. Let me at it. So, but if you're gonna send me to bad places, I can't take Jeremy. I have to go alone.
That's true. Something's gonna happen.
Cool. All right. The last topic, the last metric that at least I'm going to talk about tonight is a 75% metric. Anybody have any ideas? What do you want 75% of?
Is it a working population? So steady income?
It is not, but that is interesting. That would definitely go back to our, you know, the income growth perspective as well. So, anybody else have a guess, a gander?
Was it home ownership, maybe?
Nope.
No.
That's really high in the U.S., by the way. I think
it's
historical average is in the low 60s.
Yeah.
Which is probably still too high.
It's rising though. or sorry, lowering, I should say.
Occupancy.
Oh, it should be increasing. No, it's increasing. It's going.
Home ownership?
63%. Yep.
Yep. I guess it depends how natural or unnatural it is, but I thought I saw reports that it's not, because obviously due to rising cost of property.
Oh yeah, but interest rates are stupidly low right now.
I guess it depends on supply and depends on areas, but yeah, because I think it's still
well, here, John, we're both right.
Well, I mean,
oh no, that's 2013, I guess. Hold on here.
Well, I mean, I think unless anything's changed, they're still building 350, 400K houses minimum.
Yeah, but what's the payment on that?
Well, I feel like the prices will outpace even the loan, but yeah.
Everyone thinks they can afford more house.
A little bit.
So.
St. Louis Fred data is pretty good. I linked that in chat. It's Federal Reserve data.
Yep. Yeah. No, there's a lot of Fed Reserve data. That's definitely, you know, there's a lot of demographic, income, et cetera on there. So yeah, I mean, this is, and again, you know, what we were, you know, this goes back to 2019 here. What we were looking at before went back to 2017, 2018. So it's not, you need to be able to find, you know, the most relevant information when you're going through this. Again, like we're kind of given guidelines and things like that that we'll utilize when we're going forward and identifying locations and identifying neighborhoods, identifying properties, etc. So again, this is not necessarily yeah, especially St. Louis, Fred, is really good information there. So 75% is the ethnicity mix. So you don't want a single large ethnicity to make up almost all of that area's residents. You want to have some diversity.
That's racist. Somebody had to say it.
Jesus, John.
We better stay on the Missouri side.
So anybody have any guesses as to why that is?
It's probably indicative of an area that's undergoing change. It's not just stuck in the past in one place.
Yep. It's a good piece.
I mean, if you follow, I guess, the corporate world, I mean, clearly a lot of growing businesses bring in, you know, foreign workers. I assume it has to be something like that, and we're specifically talking tech companies.
Yeah, it's interesting.
I would think it would not limit your clientele as much. You know, so if you
Right.
have a single ethnicity, you're going to limit your clientele.
Exactly. I think that's definitely much more what Neil's focus was, I guess, from this data.
So is he saying then ethnic? Some races obviously are sticking to income levels then, because I mean, if you're part of a race that's considered lower income, is he saying the mix, depending on your property, is obviously going to give you a better return? Or
yeah, no, the mix of it's going to give you a better return. Correct. And so basically he wants, so it becomes in a pie chart usually, and you don't want, you want to have multiple slices and multiple colors in that pie chart. So again, same website here. If you just scroll down, so it says races, ethnicities in here. So this type of makeup is actually probably pretty good, and it provides you a lot of information, or a lot of ability to find a good renter across multiple ethnicities. It's not just tailored towards one ethnicity. That's crime down there.
Are you able to see that data with the heat map that you were showing earlier somehow that breaks it down by neighborhood? I'm not sure how that would work in that type of a map.
So in this, yes, you definitely can. So I just clicked on the link right down at the bottom here. Sure. Is your mother here? Oh. Okay. My daughter gets a sucker. Lucky her.
I thought that was part of my answer.
So, all right, let me see if this
race data not loading.
Oh. Maybe it's because I clicked off. Here we go. Okay. So you do have to kind of go in here by the different races themselves.
Okay.
And
you would just have to check each one and make sure that your area that you're interested in isn't, you know, above that 70-75% or whatever.
Right. Interestingly enough, as you dig in, you find that a lot of that, maybe some of that information is not recorded. At least you know, more is more at a zip code level here. So I guess if you break it down into individual census blocks and things like that, you might not have it available in some areas. But you know, you can kind of track where different races are moving a little bit.
Also a great way to find your favorite foods, maybe. Double purpose.
Is it this one? Yeah, here we are.
I assume they pull all that stuff from census or something.
Yeah, I mean, given that all these things are broken down by the census blocks, you know, and again, you know, the last census was done in 2010. So yeah, this says 2012, 2000, Sonny. Yeah. So this page in particular, though, does take some time to load. So it but yes, you can get to that granular of data. Maybe you have to do it off of Zoom. And go from there. Wonder why this is so light there. So that means, okay, so there's been no change down there. So you kind of see where, at least white, see if I can go black at this level. Here we go. So, Native Hawaiian. Oh, nice. Huh. Interesting. South of Grand Valley. Cool. But yes, you can do, view this data, at least at a larger perspective. And see, so this is black, and it's been so it's 100%.
And I think generally too, from some of the last recordings I've seen or interviews, the metrics are still the same. So it'll be interesting to see when they change and how much they change by.
So that is really all I've got for here, other than going in and looking at any other cities that you guys want to look at real quick, just kind of playing around and everything. So happy to dig into some.
Would we where do we think we would go on our next meeting? Would we
Hawaii.
would we maybe bring up that the conglomeration of all the metrics from CBRE, Berkadia, Marcus Millichap, all those guys, and maybe share it with the group? Do you think that would be, or at least part of the time, so we could see what cities we were at least interested in previously? I think it was just about a year ago, but it hasn't changed that much. I need to find that document.
Yeah, they only go through like the biggest 20 cities, right?
I mean, I think some of them were up to like 50. I mean, Kansas City was on there, Oklahoma a little bit, but yeah, the biggest cities were on there. Now, yeah, we're probably not going to find as many secondary or third rated cities, but still, I would assume if you know, the Phoenix or the Orlando or the Atlanta we were looking at fit a bunch of metrics we were looking for, you know, not overbuilt, growing, plenty jobs, plenty movement and population and income growth, I would assume, you know, there'd be a good chance for the outer layer cities to do well too.
Well, no, that's exactly, and that's exactly where, you know, something like this, so that's the, you know, income here. Well, you know, I mean, if the income's really rising this much in this area, maybe that's not the area you invest, but maybe it's this area and this area where the incomes haven't risen so much right now.
Right.
They've actually declined, and, you know, try to figure out why. I mean, this is Westport, so I guess it's probably a little bit more industrial or just, you know, larger buildings. So that might be the reason why. But, you know, like why, you know, why is this area white? Why is that area white? That type of thing. From an income level perspective, why has the income gone down 31%? You know, but that's really where you want to go, because, you know, eventually growth will push out. You can only build up so high, and everything like that, and the growth is going to push out. And that's what you're seeing in Kansas City from, you know, the Kansas side, from, you know, in and around the plaza, you know, south of the city center, that type of stuff. It's the, you know, Kansas City, Missouri city center. You know, that's just where a lot of the, you know, data is going. I mean, actually here, I don't know if you guys know, so where is so right here. So that's really interesting. I think this is, yeah, North Indian Mound, yeah. So like right around here, this would be the Pendleton Heights neighborhood, just outside the city center there, just, you know, 5-minute drive, even that. I mean, the house prices are going for $250,000 to $300,000 right there, believe it or not. But yet the median household income is still relatively small. So, I mean, you know, this data is not updated, basically. Because I've seen the transformation. I got one of my multifamilies is over here, and everything. So I drive by it in and around that neighborhood, you know, 3 times a week. And I'm looking to buy a couple houses right around here-ish or so. That just make phenomenal, either a flip or a rental. So multifamily rental. So, but again, you know, you see these incomes and things like that. You know, these wouldn't necessarily meet some of that criteria that we mentioned, but because I'm in and around it so much, like I see the properties being improved in that area, that, you know, this is sometimes a lag in data, you know, here too. So, and honestly, I don't even think that was happening. You know, this is all 2017, I think, you know. I don't even know if that was happening in 2017. And this is probably like the last 18 months or so. And there's other areas of Kansas City going on with it as well. But Kansas City is a terrible place to invest, so don't come here.
Yes.
Right, John?
Yeah. For all the.
Right. What I would like to be able to do is basically put together, you know, a matrix spreadsheet that, you know, listed the cities, listed these data points, and then just, you know, you kind of make a decision based off of real data, as updated as you can get. That's really would be the best thing to do.
And
but I haven't had time to do that.
And we can also revisit the big commercial multifamily brokers out there and check where the rankings have moved for the cities. That'd be kind of something interesting to take a look at also. Does anybody have any questions about any of this stuff, or if they're seeing anything different, any cities they like, etc.? Because you know, we always profess that, you know, obviously you should be able to look outside your city too. You know, especially if you have a good management company there and it's growing, maybe you might not be as stable, or maybe it won't be as flat or stable, but you'll have the, you know, appreciation. So Adam, didn't you say somewhere in Utah you liked or something like that? I think Greg mentioned that on the last call.
Yeah, well, here's Provo, Utah, right here.
The markets that are interesting to me are Des Moines, Reno.
Reno.
I think Reno might be what you're thinking of. I didn't mention anything in Utah. I think Reno is a very interesting market.
Reno.
Oh,
Yep.
not Indy. Yeah. All right. So population 250,000, 2017. So that's probably pretty good. Seems like a good growth rate there. Household income. So that's pretty good. Per capita income. That's good. Home value. That's good. And poverty. Good ethnicity mix. Crime. It's below 500 and
Trending down.
generally trending down. Generally trending down. It's going to be really interesting when the 2020 data comes out of here, and
It will be.
how much of a decline in crime, you know, the city's being locked down for 2, 3, 4 months, whatever it ends up being, and then if it spikes back up into 2021.
What makes it interesting to me, and I have some clients there, so I have, you know, eyes on the ground, if you will, and I usually make it out there once or twice a year. But ever since California has continued to make life more difficult for business owners, Reno is a location that California businesses are relocating to because it's literally a 10-minute drive from the California border. And I see a lot of growth happening in that market as a result. I mean, there's a ton of tech companies going there right now.
Gotcha. And so on that same thread, you know, you have, I guess, Sparks right next door. You know, the suburb. I mean, it's only a matter of time before those two cities really merge. I mean, and not that they're going to physically, you know, they're going to physically merge, but not that they're going to merge from a city body corporate standpoint or anything like that. But, you know, if Reno is too expensive, maybe you look next door.
Yeah, well, there's a lot of wealth in the area as well, because Tahoe is literally 45 minutes away. So I just see that area doing nothing but growing for a long, long time.
Yep.
Unless California.
I saw Carson City here.
But I don't think that'll happen.
So you got the capital here, Carson City. What, an hour away, maybe?
How far a drive is that from San Francisco?
That is from San Fran, I want to say 5 or 6 hours. From Sacramento, it's 3 hours.
Yeah, so it's a bit of a drive to Silicon Valley. But you could do it. Yeah. I'm in tech myself, and there's a shocking amount of stuff in Silicon Valley, just compared to Kansas City, for example.
Oh, yeah.
That's true.
Yeah, that's all I really had prepared for today. So Reno might be on the list. You said Des Moines. I'm from Iowa, about an hour from Des Moines. Oh yeah, that's right. You're a
Yep.
cyclone.
I grew up in that area, so I know it well. It's comfortable.
I grew up in Raleigh, North Carolina.
I like that place too.
Very good growth, very good education. Very, very highly educated area, Raleigh, North Carolina. A lot of
Yeah, Raleigh's a good market, I would say.
I like that place. I think that was on one of our lists for large income of business, or large introduction of businesses changing over.
Generally, you hear about demographic shifts from north to south, right? For weather reasons and possibly for other reasons. I'm not sure the whole detail there.
Yeah, I mean, in general, Texas has just blown up. I think Florida's doing pretty well, Georgia. But yeah, the more California does make it difficult, people move.
My family came from the Northeast, went to North Carolina. They're not moving back, staying down there after retirement.
Right.
So, Greg, while you're looking at the Des Moines map there, are you pretty familiar with Polk and Dallas County and the growth that's occurring between Granger and Des Moines along Highway 141?
To the south?
Nope, to the north.
To the north.
Northwest corner of the metro as you
Yeah.
go through Grimes and up Highway 141. So I drive that probably every other month, and it is just blowing up.
Gotcha.
We've got probably 2 apartments that we took a look at there that we did some preliminary underwriting on. One in Urbandale and somewhere else, Greg. I don't remember.
Near Drake. It's more downtown near Drake University.
That was last year. There was another one that we were taking a look at.
But this area down here on the way to Pella as well. This corridor down here is really seeing a lot of growth as well. But it's and you know, I mean, Ankeny up here.
Yeah, Ankeny is just massive now.
I mean, Altoona's kind of slowed down a little bit, but it was good for a little while. But no, I mean, I don't think you got the city capital, or state capital, so that's not going anywhere. You got 3, 4, 5 of the largest insurance companies there that have been there for eons. They're probably not going anywhere. You've got a city that put together initiatives for growth and to attract businesses.
Yeah, they revitalized the whole downtown area, and it's drawing people.
It is fantastic.
Yep.
I never went downtown. I would scoot around, Interstate 80 and scoot right around over here to the mall. Which I think the mall still exists, but it's old school now because there's another mall that got built out over here. But like this whole there's an interstate loop in here, but like you never went inside the interstate loop. Like there's no reason to really. I mean, you went maybe for the basketball and the wrestling tournaments for the high school stuff, in and around this area in here, but that was really about it. And now, like, I mean, it's a pleasure to walk around down there. I mean, it really is. Need to have an RSS feed for all the city planning commissions and things like that and all their 2030 2040 plans and all that type of stuff out there, and who's making initiatives to revitalize areas and that type of thing, and getting those paths of progress.
Was it Thomas that mentioned Raleigh? Was that
Yeah.
Thomas?
That's right.
Yeah.
Is North Carolina one of the states that doesn't have state income tax, or what's the draw to North Carolina?
I believe that North Carolina has taxes of every type. I don't think they're super high, but my family went down there because of the universities, research triangles, what it's called. Raleigh-Durham, Chapel Hill has UNC.
Yep.
And NC State, where I went, by the way, to NC State. Incredibly high education level, a lot of research.
Okay.
in most cities. Yeah,
So
like
really good tenants, probably.
R.A.
R.A.?
Greg.
L.E.
There you go.
Third time.
That's not right. They're wrong.
I'd suggest a change for them.
So 500,000 population. So good income growth, close to 50%. Home value growth, close to 50%. Good, low poverty, that's good.
Greg, I like that Thomas brought up Raleigh just because I think about some of the larger investment groups, and they're focusing on the major MSAs like Charlotte, right?
Yeah.
But they're not thinking about Raleigh. Or like they're looking at Kansas City, but they're not thinking of Des Moines, Omaha. They're looking at Vegas, but not thinking about Reno. Like I like these, I wouldn't call them tertiary markets, but I like these kind of middle ground
Secondary.
markets like this.
Yeah. Well, and you know, I've done a lot of research and analysis on just, you know, cycles in general, and the entire world is very cyclical in nature, and what you see in these you know, 15 to 20 year credit creation cycles that we're kind of in right now, we're kind of at a midpoint of it, is the first part of it, the larger cities do extremely well. So the New Yorks, the LAs, maybe even to some extent the Denvers and the Dallases and those types of things. The second half of that credit creation cycle, the smaller tertiary, secondary cities do have much more appreciation. And again, just go back and look at data. You got people leaving the bigger cities for smaller cities, but they don't want to go to 10,000 person towns. They want to go to 250,000, 500,000 person towns. They want to be around education. They want to be around employment, things like that. I mean, I lived in Sydney, Australia for 6 years. You know, 4 or 5 million population plus, and my wife and I came back. We were back probably 3 months, 4 months into the U.S. and sitting outside at 5 p.m. and just like I mean, we hadn't had that for 6 years. Right? You know, I mean, because of, you know, reduced traffic, just the bustle and the hustle of life and everything like that. Like, it was just amazing. And I live in Lawrence, Kansas, where there's, you know, a town of 100,000 people, and you notice when the college kids leave and when they come back. You definitely notice that adding 20, 30,000 population into the city. But I don't know if I would enjoy living in a Kansas City, you know, metro place right now. At this point in my life, I definitely don't think I would enjoy a larger city right now, having lived in both and everything. So it's you know, I think these types of areas are you know, this 250 to 500, this 100,000 to 500 population areas are going to see the more growth than, you know, the 2, 3, 4, 5 million population areas. And more growth in terms of appreciation of properties and things like that, I think I'll say.
One aspect to this to think about is the area, the greater metropolitan area, right? So Raleigh specifically is small, but if you look at Raleigh, Durham, Chapel Hill in conjunction, it's actually a lot of people, right? So it's
right.
It's, you know, they're a little more like maybe equally sized, Raleigh and Durham, right? But right next to each other. So one way to look at it is like TV market size versus, so because that's like, I don't know, like how big is New York, right? It's anywhere from,
depends on what borough you talk about. I mean, really,
a couple million to 50 million.
Yeah.
What's the biggest city in the world? It all depends on how you measure.
Yep. Yeah, no, this whole area, you know, the Research Triangle, things like that. I know it's a highly desirable area from an education perspective, from employment perspective, things like that. I mean, that research park is you know what, I can't even remember, a few 100,000 employees there. I mean, just inside that kind of you know, this kind of area. But so I And what I'm talking about is just within the actual kind of research park. You know, there's actually an area called Research Park, if I'm not correct. Right,
Yeah,
Thomas?
the Research Park is an official location in the middle there, right in between Durham and Raleigh.
Yeah.
Yeah, my dad worked there for like 20 years. Big companies, a lot of high-end research. He was at DuPont, you know, old school chemical company.
So yeah, no, I mean, there's you know, there's a lot of cities in the U.S. So, you know, I mean, I didn't think about this. You know, just maybe scale out on a map. So what cities pop up? You know, I mean, Google has these cities popping up for a reason. You know, either due to you know, population, the number of searches that occur, proximity to something, you know, things like that. So you know, maybe the Raleigh-Durham area is not it, but maybe you got to go over to Greensboro or Greenville. You know, I mean, you know, again, you know, there's a lot of things you can do to identify locations. We've given you 5. You know, and again, nothing beats boots on the ground, in my opinion. So.
And what's nice about having so many people in the group and people living different places, having family different places, we're trying to look for property, you know, all around the U.S. So it's actually really cool to see people chime in and say, hey, I really like this place. I've lived here. I know this place is growing, because that's going to be a big deal come, you know, underwriting time and doing your due diligence. So we definitely encourage people to keep an eye out, you know, get to know brokers in those areas. Also, if you come across one, because that's always a challenge, is not only doing the due diligence and working through the deal, but actually finding one. But lately I've been seeing a lot of states come out. This is particular, I think, from like Berkadia, I believe. They've been releasing a lot of deals out lately last week. So it's kind of interesting. It was quiet for weeks, and now just last week, just a lot of stuff has been coming out.
Vacancy increased.
Yeah. I don't know. It's I mean, there's some more like Class B and A stuff though. From, I mean, I'm sure anywhere from 15 to $30 million properties. I mean, it's B something, B plus, 250 to 250 units stuff. Didn't see any value add, of course. Everyone loves that, but yeah, it'll be interesting to see. I thought it'd be fairly quiet until the elections, but
Vacancy increased.
People,
Stimulus dried up.
People are ready to get out.
Yeah, the owners are, yeah, because their vacancy increased.
Possibly, yeah.
So, Boise was another one. Wyoming would be nice, man. Anyway, that's about all I've got here.
All righty. Well, we went over by 30.
That's all right.
It's all your fault, Greg.
It always is. What you want to try to do some boots on the ground stuff next week? Or you want to consult